Hello, and welcome to the Home and Finance Show, and thank you for tuning in. I'm Janis Bradley, broker owner of JB Real Estate Consultants, and joining me is my co-host,
Diana Rice-Wilkerson, lender with Fairway Independent Mortgage.
We are your seasoned, trusted advisors committed to personally navigating you through the home buying, and home lending process, and we also talk about renovating. This show is designed to provide you with current and relevant information about different aspects of home buying, home selling, and lending and renovation so that you are knowledgeable when making decisions for you and your family. You can also hear us on Saturdays on Radio 1, 1310 AM, 92.7 and 95.1 FM. That said, if you are in the market to build, buy, or refinance, or remodel, we'd love to represent you. You may reach us at the contact information below. Now on with the show. Diana Rice-Wilkerson, what's up today?
Listen, we are going to have a blast today.
Okay.
You know, one of my favorite topics is credit.
That's everybody's favorite.
And if I could come back...
I don't think it's really their favorite, but we're going to make it their favorite because we want to help them.
That's exactly right. If I could start my profession all over again, I would be like our guests. I would be a credit professional.
Okay.
But since I cannot start my profession over again, I'm headed to the rocking chair, which is good.
Well, let's just kind of stop for a minute, because statistics show if you retire, for those of us who are part of the baby boomers,
yes,
if they retire, they sometimes will, in the next 3 to 5 years, get another job.
Well, then, and then I may be reaching out to our guests for help.
Sounds good.
And viewers, we have a wonderful guest today. His name is Chris Fisher. He is going to be helping us have this very, very important conversation around credit. Now, we only have less than 30 minutes. Right. So we've got to hit it hard and hit it quick, but this is our guy.
Get your pen and paper
he can
out.
hit it hard and hit it quick. Hello, Chris Fisher. How are you, young man?
Thank you, ladies, for having me. I am doing so well. Like I said before we got on here, anytime I can chat about credit, I love the opportunity. So I'm looking forward to breaking some myths and giving some people some awesome tips and tricks of the trade.
Well, listen, let's start by you telling our viewers what you do, who you are, what you do.
Yeah. Absolutely. So my name's Chris Fisher. I'm with My Credit Guy, Credit Restoration. I have been in the credit repair world now going on 9 years.
Wow.
I got into the credit repair world when a good buddy of mine, actually, I was at the time playing college baseball. I had a business degree, didn't know what I was going to really do. And he was posting on social media that he was getting people back to the closing table that had some credit issues at the time. So I hit him up. I kind of just wanted to start helping people. I had a passion for always wanting to make sure that we were helping people and making sure that we were setting them up for the future. And then before you knew it, I was in the credit repair world, right? We help people that, unfortunately don't qualify for home loans, get home loan ready. We help them tweak their ins and outs of credit, like I said, give them little tips and tricks of the trade, correct inaccurate negative items. And then we also help with like settlements and pay for deletions as well if the borrower has like collections and stuff like that. So we really attack the credit from all different angles to boost their credit score as high as possible, as quickly as possible, and then we send them back over to their loan officer for that home loan. So that's a short and sweet version of what I do.
And he makes it happen. Very good. Thank you so much.
Thank you for that. But you know what I like? I like the fact that you use the name of restoration rather than credit repair. Because that that's just how a person feels. When you say repair, I'm broken. So I need all kind of help. Restoration just kind of lets you know I'm part of just improving. So I like that. I like that.
So talk to us about, let's start off with collection accounts, because I know we have a very short period of time. So let's start with collection accounts. Tell us what happened in the world of medical collections.
Yeah, so in the last couple of years now, there's been some awesome updates for borrowers that have had medical collections, which is great news, right? Like anytime that somebody has a tragic event that they add medical collections, it shouldn't necessarily just automatically ruin their credit, right? They just maybe went through some bad health crisis or something like that. It shouldn't always, impact their credit. So it's great news. What happened last year in July of 2022. Actually made a new law, federal law, come off the credit reports, credit score up immediately after they are paid. It's immediately paid. The credit bureau within 35 days are removing those off the credit report. So back in July of 2022, that's what we saw. In July of 2023, so next month, we're going to start seeing that medical collections under $500 will be removed from the credit report as well. They've been dabbling that kind of in front of borrowers' faces now for a couple of months that in 2023 we're going to drop this, great news and everything like that. They haven't made the official announcement that it is like that, but over at My Credit Guy, we are seeing medical collections that are under $500 come off of credit reports as well, because creditors know that that's coming down the pipe.
It's going to happen.
Right?
I was going to ask, are you seeing those medical collections just come off, or are they the result of your efforts to remove them?
So paid medical collections are just coming off the credit report.
Right.
So paid medical collections, they just
Right.
come off the credit report. Now, the ones that are under $500,
Yeah.
we do kind of have to push them a little bit, that there is a new federal law coming down the pipeline that, is going to result in these medical collections coming off the credit report anyways.
Yeah.
We're just asking you, out of the goodness of your heart, will you remove it quicker than what the federal law is stating? So the $500 collections, or $500 or less medical collections, we're seeing those with the result of kind of pushing them just a little bit.
Excellent. And I have actually seen the the medical collections come off as well when I'm coaching.
Okay.
It's like pay the medical collection, it will automatically come off and score goes up. So it's a beautiful thing. It is a beautiful thing.
Yeah.
So when you're trying to work with the creditors,
absolutely.
sorry about that. So when you're working with the creditors, are they receptive to your saying, hey, it's going to come off July, we're in June, so are they receptive to going ahead and removing them? Good.
Exactly right. And that's what's beautiful about it, because they really are doing it out of the goodness of their hearts, right? If we go after like a medical collection that's $1,000 or more, though, they're not going to remove that, because they know that the federal law is stating that anything under $500 is going to come off. But they are really just, again, medical collections is a whole different ball game than regular collections, right? Regular collections, they're not going to do that out of the goodness of their heart.
Right.
Regular collections, you have to make sure that you get the pay for deletion letter in place before you actually pay it off. Otherwise, it could potentially drop your credit score, right?
Exactly.
It happens all the time where borrowers just go and they'll pay off collections that are 5, 6, 7 years old, and sometimes it'll drop their drop their credit report because it refreshed a negative account on their credit report, right? So you have to be strategic with regular collections versus medical collections. It's a whole different ball game.
Hey, Chris, my question is, do medical collections and regular collections have the same impact on your score?
Yes,
Okay.
exactly right. So it doesn't matter. A lot of the rating that's attached to it is the same -9 collection rating is what it is. So they impact the credit score exactly the same.
So what do you advise with the medical or the collections? What helps them, either to pay it all off, or if they can make some kind of arrangements of some type, and if they've done it like 3 or 4 months? Share with us how you go about restoring.
Yeah, absolutely. So the medical collections, it really is try to settle that out for as little amount as possible if they will allow that. Now, medical collections, usually they've already factored in what your insurance has taken and all that good stuff. So you're just going to pay that off and it'll automatically come off. Now, with regular collections, you have to strategically go about doing it, right? Because otherwise, like I said, it's going to drop your credit score. You have to get the pay for deletion letter. And then after that, it doesn't really matter if it says paid in full or settled on your credit report. That doesn't make a difference, right? It matters, honestly, after the fact, if it gets deleted from the credit report, right? So you want to set up an agreement that, with Joe Schmo Collection Company, whatever collection company it is, hey, Joe Schmo Collection Company, I'm going to pay you this $1,200 that I owe you, but I want this to come off of my credit report. And then once it's removed from the credit report, it's the same as like a medical collection. You get a negative off your credit report, your score goes up, right? So you have to be strategic about it, though. Like I said, if you don't get the pay for deletion letter in place and then you make that payment, the creditors, they do not care. They will not work with you after the fact. They have no skin in the game. They already got their money. They don't care how it reports on your credit
I
report.
see.
So it's always make sure you're getting a pay for deletion letter first and foremost.
Wow. Wow.
And what percentage of regular collections can you get that pay for delete letter on? What percentage would you say?
You'd be surprised. You would actually be really, really surprised. Normally, around probably 50% of creditors will actually offer that. And honestly, I've seen creditors that like we track it, right? So over the last 9 years of my credit guide being open and operating, we've tracked what collection companies do what, whether they receive pay for deletion letters well, or whether they don't give them out, right?
Right.
You would be surprised how many that we've worked with in the last 8.5 years now that are at like a 10% pay for deletion letter. And then before you know it, you get the right person on the line. They've had their coffee, they've had their creamer, they're ready to issue that pay for deletion letter because they want that borrower's right. They want that money, right?
Yes.
So it's just a matter of honestly getting the right person on the phone. I would say on average, though, you're looking at about a 50% pay for deletion letter on regular collections.
And excellent information. And then what about like the credit cards like Capital One and First Premier or a bank that has a charge off? Is there a chance of getting that deleted?
No, not typically, right?
Yeah,
Just
right.
because. I mean, those guys are the biggest big time players in the industry, right?
Right.
So like I can't make them remove it. And most of the time that you're getting negative accounts removed, it's out of the goodness of the creditor's heart, right? Like they might be in some violations, and that's what my service does is clean up those ones that are in violations. But then once they're verified accounts. If you have a verified charge off, it's likely not going anywhere. You just want to settle that out, basically rip the Band-Aid off as soon as you can. So that way that DLA, the data last activity on the credit report, updates to today's date. And then you start that 7 years, where in 7 years, it'll be completely removed off your credit report. So, but yeah, there's no like pay for deletion letters on charge-offs typically.
And one more thing I'd like you to explain, because the term charge-off is very confusing to the consumer. Many of them think if it's charged off, I mean, they're looking at it on their credit report, their logical mind says this debt is charged off. Please explain what it is and what it's not.
So a charge-off is not where the creditor writes your debt off and that you don't owe it anymore, right? They are still coming off after you for up to 7 years for that money that you borrowed, right? You borrowed it. A lot of people, and like you said, they think in the back of their head that once it says charged off, that the creditor automatically written off the debt and they're not coming for them or anything like that. And then before you know it, they fast forward and they're still getting, collection notices and everything like that. I also have news for people that even after 7 years with a charged off account, they're just going to sell that to a third party collection company and they're going to continue to chase after you for that debt. So that's where it's like with charge offs, I'll tell anybody that has a charge off, once you come into my program and you have a charge off, if it's verified, let's get that settled out immediately, just so that way it is done. You've ripped that, like I said, you've ripped that Band-Aid off, and that way you can start to heal from that. Other than that, there isn't really anything that charge-offs you can do, right? They hold all the trump cards, unfortunately. They got all the best cards in their hands.
Yes, they do. Absolutely.
Yeah.
Absolutely.
So, Chris, I have a question.
Yeah, go for it.
Sometimes when some potential client is calling me and they're interested in purchasing a home, one of the things that I just start cringing on is when they say, well, I'm working on my credit. So then I just have to kind of hold my breath. And mainly because of the fact that, what would you say the do's and don'ts about thinking that just we as an individual can work on our credit? So help us with that, please.
Yeah, I tell
Stay
everybody.
on that for about 20 minutes.
Yeah, well, no, and I tell everybody, I'm like, listen, I could honestly, if my diesel truck in the driveway breaks down and say the transmission goes out, I'm a good old boy from Iowa. I could get under there. I could turn some wrenches. I could figure it out. Same thing with credit. If you've got enough time and enough willpower to do all the research, all the man hours, you research the addresses, you send it certified mail, you follow up like a beast, you can do it, right? Do you want to is the question. When my transmission in my truck goes out, I take it to the mechanic, because guess what? I'm going to be back on the road next week, right?
Exactly.
If someone's trying to fix their credit, and like I said, I don't ever discourage anybody, because there are people out there that it's like
Yes.
they have had success, right? They do have inaccurate negatives on there. You challenge them, they come off. They might have a couple more. They reach out, they do the pay for deletions, and they're done, right? You can do it. It's just a matter of having enough time in the day and enough, like I said, research power to make sure that you're going about it correctly. Because if you don't go about it correctly and you just start, like I said in the previous question, you start settling accounts out, you're going to drop your credit score. I've seen
Okay.
borrowers drop their credit score 150 points by paying their collections off, thinking they're doing the right thing, not getting the correct documents in place, and then all of a sudden they're like, well, Janice, Deanna, I paid off all my collections. What happened? It's like you just updated all the dates, and those negative collection ratings are
That's what
still
I'm
there.
looking
It's like
for.
reopen it.
Yeah.
So
Yes.
yes,
So,
you could potentially drop your credit score significantly. Yes.
okay. That's what I was looking for. Yeah, the do's and the don'ts. Okay, so
Yes.
One of the things, and I had a client who did a similar thing, but his situation was he had a great score, he just wanted a higher score, because some people are aspiring to have a perfect score. So he pulled his credit, and on that report, Chris, you know how those little suggestions come out from each bureau? That I was told that is why your credit score is not perfect. It's not necessarily whatever your logical mind thinks. So this guy, one of the things it said is he had too many open revolving accounts. And so what he did, he closed all of them.
closed them.
Oh.
And his score went down, right? I tell people don't use their logical mind in any of this craziness, you know? And then he was like, Diana, because I couldn't figure out why he did it. And then he told me, well, when I pulled my credit, it said I had too many open revolving accounts. And he was older and he no longer used it. So speak to that too. You know, when it comes to revolving accounts especially, talk to us.
Yeah, well, for any account, honestly, any account that gets closed out, whether you close it early, it was a 20-year-old credit card, or whether it was an installment loan that you ended up paying off. Say you got an installment loan for an auto loan, and then you paid off the 5 years, whatever the case is. After an account is paid and closed, you lose all of the pay history that's attached to that account. So if you have 5 years of good pay history on an auto loan, the day you pay that off and the day that they're sending you over the title that says, hey, congratulations, you own this car, all of that payment history is gone, and it's like it never happened. So you'll see sometimes where credit scores, like you said, in that case, Deanna, like they would have dropped probably significantly, 60, 80 points, depending on, you know, how old the account was. When you're dealing with revolving lines of credit, the best thing that you can do, and I'm going to give you a couple of tips and tricks of the trade right now, what you can do is you pay them down, you get them between 4 and 10% balance to limit ratio. So if you have a $100 credit card limit, you're going to keep it between $4 and $10, right? Keep it really small. You're not going to use it for any big purchases, so that way you get out of hand or anything like that. You're going to put a tank of gas on it, you're going to pay it back down. You're going to do that for 20 plus years, and before you know it, you have an 815 credit score. That's the way that you manipulate the credit scoring algorithm to think that you're playing their game, right? You make sure that you don't pay a bunch of interest because you have the limit way, or the balance way up close to the limit, or way up close to the limit, and then before you know it, you're an 800 borrower just by doing little tips and tricks like that. So revolving lines can also hurt your credit score, Deanna. You know that, right?
Yes.
When you get over 50% balance to limit ratio, right? So when a credit card is over 50% balance to limit ratio, it's actually technically hurting a credit score. It doesn't matter if it has 10% or 10 years of good pay history. If it is over 50% balance to limit ratio, the credit scoring algorithm looks at that account as almost like a negative account. It's hurting the score. So if you have any cards that are over 50%, chunk them down quickly and watch your credit scores raise.
Excellent. What's your advice about paying for access to the credit bureau's credit scores? So if I sign up with TransUnion, I've got some opportunities out there to sign up for different types of accounts that have a fee associated with them. You know, should I do that or should I not? Or should I use Credit Karma to track my score?
I mean,
Where should I go?
yeah, so Credit Karma, do not trust the credit scores, right? It's a completely different credit scoring algorithm than what your lender is going to use, Deanna, when you pull credit to pre-qualify somebody, right?
Right.
It's not the same. It's not the same scoring algorithm. I see it all the time where, borrowers will come over to me and they'll be like, well, my Credit Karma score says that I'm at a 620,
Right.
I should be pretty close. And then we pull an actual report and they're at a 520.
Yeah.
The
Right.
thing that I tell tell people Credit Karma is like, listen, guys, you can go to Credit Karma and ask to get the money to lend you for their house till you're blue in the face. They're not going to lend you any money for a home loan. So you have to go what often Deanna says, because she's the one that actually has the money in this whole situation for the home loan, right?
Right.
Credit Karma scores, do not trust. I don't mind Credit Karma when we're talking about like the updates that they give borrowers,
Yeah.
if they're getting close to adding a late payment, or if something, was added onto their credit report that they don't know about. Like in that situation, absolutely, totally fine to have that. Just don't quote your Credit Karma scores. They're not accurate, unfortunately. So
Right.
when you're talking about the other ones though, Deanna, those are totally fine. I just don't like the fact that they have to sign up with like 3 separate credit monitoring services to have
Right.
access to the actual bureaus. So I tell people, I'm like, honestly, if you're just looking to monitor your credit, there are better options out there for like only $20 a month, where it's a 3 bureau looking for the actual scores. Those services are actually pretty good, right? If you're just trying to do like kind of a soft pull option to see where your TransUnion or Experience score is, depending on the model, not a bad idea. It's just kind of gets a little expensive for borrowers sometimes.
Right. Totally understand. Excellent.
So, what would you share, Chris, with the listening audience? The 3 top credit tips.
Yes, absolutely. So the first one we just chatted about. One, monitor your credit. You have to monitor your credit so that way you know how you're doing, right? It's like tracking results in the gym or tracking results for a baseball player. Are you getting better or are you getting worse, right? We need to know so that way we can identify and address the situation. So one, monitor your credit with a reliable resource. Not like I said, you don't have to worry about paying the individual fee for each individual credit
Right.
bureau. Get one that you trust and kind of like you like the interface is what you're looking for,
So,
right?
let me stop you
Monitor your
there.
credit.
Real
Number
quick.
two,
I was going to say, when you're saying monitoring, what else? Why else would you monitor? What would
just in
be a
case, I
good?
mean, yeah, I mean, just in case you do add a negative, you can address it quickly. And so that way you
Right.
know if
Okay.
something, I mean, if something gets added onto your credit report that you don't recognize, don't wait 6 years to
Good point.
handle it, right? Like
Okay.
I had a borrower literally, ladies, last week come to me that had a medical collection from 5 years ago that she had no idea was on her credit report
Okay.
because she hasn't looked at her credit report in over 5 years.
Thank
And it's
you.
just like if you had credit monitoring, it would ping you and say, hey, guess what? New little medical collection, address it, then move on. So
Yes.
that's the main reason that I would monitor my
Okay.
credit.
Well
Good.
said. Thank
Good.
you for
Yes.
that.
Yes. Yes.
And any other tips?
Yes, absolutely. I got 2 more for you. So the
Okay.
second one would put your stuff on auto pay. Believe it or not, this is a tip that people like. It's kind of one of those things where I say it and it's like it's not like a heavy hitter tip or anything like that, but you would be surprised how many people it saved, because guess what? Like people go on vacation. People have, baseball tournaments, softball tournaments for their kids that they go out of town for, and then they miss it. And it's like I've seen doctors, lawyers, people that work for the government come to me and have to try to get one little late payment removed that isn't one little late payment after it happens, right? The little late payment will drop your credit score 60, 80, 100 points sometimes. So get your stuff on auto pay so that way you don't ever have to worry about it. Even if you're just making that minimum payment on a monthly basis, it's avoiding you from going down the bad rabbit hole of bad credit, right? Once you go down that rabbit hole of bad credit, it's harder to dig out than it is to go down. So auto pay is number 2. The third one, we kind of addressed it already. Chunk down your credit cards and watch what your score does. We want to make sure that you know where you're truly sitting. And with the stuff coming out here in the near future, they're talking about the trended data and everything like that, right? Coming down the pipeline with Advantage, FICO 10Ts and all that good stuff. Pay your credit cards down quickly so that way you can see you're not trying to hack the system anymore. Pay them down, keep them down. Like I said, tank of gas, chunk it back down, keep it between 4 and 10%. So those would be my top 3 tips credit wise.
So a question I have on the one-time late that somebody has because of just of the examples that you gave. So is there any way that can be remedied?
There's a goodwill letter that you can send, basically.
Okay.
As far as myself or anybody making the creditor remove that 30-day late, after it goes late, if you were truly 30 days, they hold all of the best cards again,
Yes.
right? They don't have to. They can out of the goodness of their heart, right? So like we would attack that and say, hey, basically out of the goodness of your heart, you know, this is a one-time situation. I was
Right.
in Mexico. I totally forgot, whatever the case is.
Yes.
Give them the true story.
True story.
So they can address whoever gets that letter, they can address whether or not that they want to remove it. But after it happens, they're pretty tough to get removed, Janis.
Well,
Very
thank you
tough.
for that. Thank you for that, because I think that's happened on an occasion or two, you know, because that's just life.
Yep.
I'm just talking about right in the middle of someone trying to close the next week, you know, so
Yes.
that came up.
Yes, exactly.
Chris, we've got like a minute left. And in that minute, I want you to talk really quickly to those folks who don't want you to pull their credit report because of the inquiry
Yes.
and their thought that it's just going to drop the score 50 points. What do you say to them?
Aren't going to drop your score 50 points. I promise everybody. I'm like, anytime that people are worried about inquiries, it's something that's got a bigger picture, right? There's usually some collections on there that are hurting the score. The inquiries are hurting your score 2 to 4 points max. And there's a cool little window. So say you went to somebody before you reached out to Diana and they pulled your credit within the last 30 days. You can actually go to Diana and have credit repulled within 30 days, and it only hurts your credit score once as well. So even if you fall without that 30-day window, it's totally fine. Again, like an inquiry is going to drop your credit score 2 to 4 points. I promise you. I swear on my 2 little dogs.
I love it till you swear you
Love
do.
it.
All that is.
I thank you so much for that, Chris. We
That
appreciate
was a perfect
it.
ending. It really was.
It really was. And thank you so much again for joining us today. And we look forward to next
Thank
time.
you
Your
for having me.
information was invaluable.
Thank
we
you so
appreciate
much,
it.
and have a great day.
And be safe.
And be careful. Yes.
Yes.
Thank you so much for having me. Have a
Okay.
great rest of your day, ladies.
You
All
too.
right, thank you.
Bye-bye.
And viewing audience, thank you so much for tuning in today. We certainly appreciate it. Hopefully this has been beneficial for you.
Beneficial.
Goodbye.
Goodbye.